everyone. In today's video, we'll be covering how we helped clients forecast paying off their mortgage of $350,000 in just 9 years and 3 months.
And also they saved $50,000 in an emergency fund.
And that's after they were able to pay off $92,000 of consumer debt in about a 5-year period.
Let's get it.
Welcome to our channel, DeCarollis Financial Solutions.
I'm Achilles.
And I'm Brenda, and we're financial coaches. So this is part 2 to a video of the part 1 that you might have seen.
And if you didn't see part 1, just check the description below. It'll be in there as a clickable link, and you can check that one out. Very, very interesting, very, very stimulating. If you watch that first, then this is going to be a lot more sense because this is like the part 2.
So just as a quick recap to what we did in part 1, it was a family of 4. They had an enormous amount of consumer debt. It was about $92,000 in addition to their mortgage. They're a Canadian family, so Canadian mortgages work a little bit different than in the United States. If you're in the United States, it might be a little news to you. In the States, they get locked in for a 30-year fixed rate, and they never have to change the rate unless
interest rate stays the same, consistent, which I like.
Yeah, I like it too.
Yeah.
Unless you refinance, you just have that rate for 30 years.
But in Canada, you have to change rates.
Like every 5 years.
Every 5 years.
Or 3 years, whatever you choose. You can choose a 3-year fixed or a 5-year fixed. And then when that 5 years is done, then the bank offers you a brand new rate, and it could be higher, it could be lower. And right now we're finding ourselves all in a situation where the rates are higher than what we were paying before. And we're facing an increase in mortgage payments. And a lot of people are scared on how they're going to be able to make ends meet. This specific family was scared. Family of 4, and they had negative cash flow. They were starting off with negative $145 cash flow monthly, $92,000 of debt.
That's crazy. And in video 1, we show you how they paid $92,000 off with a strategy called Velocity Banking.
They ended up getting a HELOC with our advice, and then they consolidated all of the debts with that HELOC. We eliminated $1,800 a month of debt payments, and they were able to get debt-free in 60 months.
60 months. Amazing.
Yeah. Moving on, now that they're debt-free, the next stage is they have 1.5 years left now before their next mortgage maturity. And if you do remember in the first video, we did have them use their $20,000 of savings to pay off a chunk of their debts to accelerate the debt payment factor. And then they were left with about $1,200 savings for their emergency fund. And so they wanted to get back on track with having a nest egg, an emergency fund, which is always advisable to have at least 3 to 6 months worth of money in a savings account, and that's dedicated just for emergency.
Yeah, and that's a great feeling. So think about it. You have all your credit cards paid off, your vehicles are paid off, personal line of credit or personal loan they had paid off as well. So they got zero debt. So the next thing in the strategy of having financial peace, in our opinion, is to actually have, like Brenda said, 3 to 6 months of emergency savings. And so before going ahead and paying off your mortgage completely off, we recommend that you have a buffer of savings saved just in case something happens. And we all know something always comes up.
Life happens, right?
What you don't want to do is after you finish paying all your debt, you don't have a buffer of emergency funds, and then something big happens, roof needs replacing, water heat, something's going to happen where it's going to cost a couple $1,000s. And you don't want to get into the habit of getting back into credit card debt or borrowing from the line of credit that you have at a zero balance now and paying for things that are an emergency. You really start wanting to change those behaviors to adopt new financial behaviors and start paying things with cash if you can.
Yeah, agreed. And over the next 1.5 years, they're going to be funneling their cash flow that they had left from the debt pay down and their mortgage increase of $1,100 a month, putting that into a savings account for taking the next 1.5 years to do that. And they'll end up with $20,000. And now we're ready for their next mortgage maturity date. But first, we want to cover off, there's a number of ways that you can pay off your mortgage faster. I don't know if you've seen another video that we've done before. We showed how using velocity banking, you can do it, but there are a number of ways to pay off a mortgage. Sometimes velocity banking is not the right way to do it.
Yeah. And so velocity banking has its place. It's a great, great method, great strategy. But there are a lot of YouTube videos out there that solely lean on the strategy of velocity banking. But as mortgage agents, as licensed agents, we've been able to see and crunch the numbers so that you don't have to, that sometimes velocity banking is the best strategy and sometimes it's not. And we're able to help you with the ability to look at your situation and be able to crunch it properly to show you what the best strategy is, keeping most of your money in your pocket in way of saving that interest. So the bank doesn't get it, you keep it.
Yeah. So what we do as financial coaches is we assess all the different potential ways that you can pay off your mortgage faster. And then we funnel it down to what is the most successful and cost efficient method to do that, and where you can get the most amount of savings within your means, right? Because everybody's situation is different. So back to this case scenario example, this couple's next maturity date is November 2030. Once all these debts have been paid off, and now that they've got their $20,000 emergency fund. Oh, sorry about that.
I'm going backwards.
Their mortgage balance is $350,000. We've estimated that the next mortgage rate is going to be 4.5%, but we really have no way of knowing. All signs are indicating that the rates are going to start coming down, so that's great. Amortization is down to 15 years, and their new monthly payments are $2,657 a month. And what we've decided to do is, in this specific case scenario, what they are able to do only is $1,200 monthly. And that is not just only, it's a lot. And it's accelerating their amortization from 15 years to 9 years. 9 years and 3 months.
That's 3 months.
So they're essentially making $3,857 monthly payments. And so their next maturity date is November 2035. And they're going to be at an amortization of 4 years and 3 months. And their next monthly payment is going to be $3,800, because the lower the amortization, the larger the payment, so that you can pay it off faster, and they'll be down to $176,000. And they're not going to be doing any monthly increases at this time. And so this will put them on track to being mortgage free by February 2040.
Mortgage free.
Yes.
2040, they would have saved. They're on track to save $53,174 in interest. That's like getting a salary for free.
Yeah.
An okay salary.
Yeah.
For free.
Yeah.
Just by changing some of the strategies, your money's coming into your pocket or into your household, and you just need to know where to put it, how to put it, and when to put it.
Exactly. And so they essentially went from being super scared of not being able to afford a mortgage hike, thinking they might have to sell and downsize.
With negative cash flow at first.
Yeah.
With negative
cash flow, paid off $92,000 of debt, and got mortgage free. All in, I think the total span from start to finish, it'll take them 14 years.
14 years. So they paid off $350,000 mortgage. They paid off $92,000 of consumer debt.
Yeah.
And they were able to save, was it? How much did they save?
I don't know how much they saved.
Yeah. We have to go back to the video. But they saved. Remember the 2 to 4, 5 years emergency fund? They have a good emergency.
Oh, they saved $20,000.
The emergency. Good emergency.
Oh, they saved $20,000.
So let's recap. They paid $350,000 by the time they're done with this program. They would have paid $92,000 in debt, and they would have saved $25,000 in a nice, cushy emergency fund. That's a great, great plan.
$20,000.
Did I say 25 again?
Uh-huh.
20,000. Don't listen to me.
And they'll save $53,000 in interest on their mortgage.
Nice.
All right. Thank you so much for watching, everyone. We'd really appreciate it if you could like this video, share it with your friends and family, subscribe to our channel, and set up those little notifications with that little bell. It'll really help us to get the word out there, as we really have a heart to help and want to help people really get debt-free in the right way and the most cost-efficient way possible.
So listen, we want to show you a little clip that we did to get onto our website and go to our resources page, and you'll see what to do to get a free gift. It's a downloadable worksheet that's really going to help you. And feel free to look at all of the ways you can contact us in the description below. We'd love to help you. You can set up a call with us for 30 minutes for free. It's an intro call. Let us take a look at your situation, and don't do this on your own. There is help.
Now for the free giveaway. You can also find a link to the free giveaway, which is a financial worksheet, in the description of this video as well, but I'll show you how to get there by going right to our website. So it's empowermentfinancial.ca, or if you're in the States, it's also godoverdebt.com. You come to our homepage and just click on the resources tab. And you see here, you got a link to download your free financial worksheet. And this is good to keep track for your numbers and your budgeting. You know exactly what's going on with your monthly expenses. And you just put in your first, your last name, your email address, and click download now. And it'll take you to the page so you'll be able to get access to this financial worksheet. Thanks again for watching, guys. Have a great one. God bless. And if you didn't know,
now you know.